Okay, everybody, welcome. So excited to do this webinar for two reasons. One, because I'm not the one doing it. It's actually Brandon here that we have. But two, the other reason I'm excited is because this is a topic that many of you, including some of my own clients, and I know as you guys are jumping on, many of my own clients have been asking, wait, like, is this something I can use for me? Does this work for as a passive investor? Do I have to be an active investor? Can I be a business owner? Like, how do I use this? And so the podcast I did with Brandon, I definitely could tell even when I recorded it, I pre-recorded it a few months prior. I could definitely tell you guys are going to love it. So that's why we also scheduled this webinar just to kind of dig deeper, answer your questions specifically. So don't think of this as just me or Brandon doing a presentation. Think of this as more like an interactive type of podcast / webinar, whatever you want to call it. Okay. So Brandon, of course, welcome you back on again, Brandon Elliott. For those of you that don't know, Brandon, although he's been an investor, that's his definitely been a specialty. He's now really taken this direction in with credit, and specifically, I know the big question, of course, is how in the heck can I get interest-free credit? I know in our podcast talking about getting $500,000 at 0% interest. I know that's a big topic. So Brandon, let's go into that. Let's just go into kind of again how you even came to this point, like how you even figured this out, and because I know you had to do a lot of testing and failing and working to make this work for you.
Of course. Well, what's up, Chris? I appreciate you
Yeah.
having me on. First off, it means the world to me, and good to see you again. Yeah, how I got started into real estate, like real estate was my baby. That's what I fell in love with as I saw people on social media doing it, books, podcasts. The more I read about it, I loved it, and I knew that's where the breakthroughs would come. However, I found that you know growing up poor or on Section 8 and not having any money saved. I was working restaurant jobs. I was like, how the heck am I supposed to actually afford this? This is for the rich people, right? And I
Mhm.
figured out when there's a will, there's a way. And I fell in love with credit was my second baby because I utilized credit to be able to get the funding that I needed. And I was cheap. I didn't want to pay any fees or interest or any high interest, of course. And so I figured out how to get a stack of credit cards like this and to be able to get it at 0% interest and to be able to really buy properties, complete the remodels, save myself against contractors so I didn't get screwed over by paying with, that's my insurance plan, paying with credit. And then usually having enough points afterwards to go on a free vacation afterwards. And it just snowballed into many years of trial and error and figuring this stuff out. And it's been a blessing.
Awesome. Well, so let's just get right into it, right?
Yeah.
People want to know, like, how do you get this? I mean, what kind of credit are you actually getting? Is this like bank loan credit? Are these like credit cards? What kind of credit are we really talking about here?
Yeah, so that's a great question. So when it comes down to what we teach financial literacy. I'm talking about and the real, to sum it up, it's to get the banks to say yes more,
Mhm.
right? So we want any financial instrument or product that the banks have available. We want to teach you how to be able to get them to say yes and for you to fit within their box of lending. And to be able to get the 0% interest, though, a majority of that is going to be on credit cards. And
Gotcha.
so once you learn that aspect, bank relationships are very, very crucial. Every single bank has a different rule, a different policy, and different unique type of factors that really bring a big piece of this all together. So once you know all these things, then you can put your list in the right order.
Perfect. Who would this not be for?
Who does not before somebody that is going to take the credit and then go buy, like a $20,000 Gucci sweatshirt or, or like jewelry or something like that. Like when you get this funding, it's so crucial that you buy investments. You buy like assets that are going to pay you, right?
Mhm.
Otherwise, this isn't going to be beneficial. And
Yeah.
some people want to use my strategies to actually buy a 30-year long-term investment like a property or a 30-year fixed. That's not going to be necessarily the case either because the 0% interest is going to be for anywhere from 6 months to 22 months, usually averaging about 15 to 18 months. Of course, you can keep doing this every 6 months, which is beneficial. And yes, we'll teach you, how to get the 30-year fixes, but it's not going to be a 0% interest.
Right. And I think that's really important to understand. So definitely, I think that's a big key. I mean, is there any factors like age that might be a hamper here, or anything like, certain type of credit score too low, or credit
Yeah.
history, or anything like that? Anything that might prevent somebody from getting this?
Of course, yeah. So when it comes down to age, there's no discrimination. We've helped out people 18, 19 years old get 400,000 in new credit lines with no job, even, which is crazy.
They just
Same
can't be
thing.
15.
Yeah, yeah. They can't be 15, right? But there's certain things like right when you're on the edge there of 16 and 17 that there's starts to be certain financial instruments that can open up to you.
Mhm.
Right when you turn 18, sky's the limit. I did it with my nephew. I got him to 817 FICO score in his first 30 days of being 18. And
Wow.
and so there's some cool things that you can do that with that. Not just young, but also, people in their 70s we've helped out. So um, when it comes down to a FICO score, yes, it really needs to be 650 and above, but we don't really even bring up these numbers because it's really irrelevant. When it's every single FICO score, we want to get to the 800 club, bottom
Mhm.
line. And just because you might already be in the 800 club, you might walk with a big chest thinking like, all right, well, I can get a bunch of this credit just naturally on your own. It's not the case. If you try doing this without the proper education, you'll get maybe 2 to 3, maybe even 4 credit cards if you do it luckily. But it's you're not going to be able to get the 10 to 40 plus within the next 30 days, is what we teach. So it's very
Right.
crucial, and it is a 4-step process. So it's education, fix, build, leverage. Even if you're in the 800 club, you got to do a little bit of fixing, and it could be as simple as removing some old outdated addresses and employer info that doesn't need to be on there. Or it could be as extensive as 60 plus hard inquiries, bankruptcies, 100K in collections. We've seen it all.
Yeah, I think that's one thing I really like about what you're doing with your company, is that you're not just saying, "Here, I'll just get you some, lined up with some great credit cards." It's not just that. It's
No.
about building the credit, like you said, fixing it, building it, and then you
Yes.
can start leveraging it, right?
Yes. And after you get done fixing, I mean, that makes up 3 out of the 6 boxes.
Mhm.
Your FICO score should be around the low to mid 700s at that point, which is good. It's good.
Yeah.
It's not great though. It's not where you want to do your mass apply. So afterwards, you focus on the next 3 boxes, which ends up being for build, which is going to be your total accounts, your utilization, and your
Mhm.
average credit age. Once you finish boosting up your score, which can be done in less than 30 days to get to the 800 club, then you can actually do a successful mass apply and get the 90% approval odds.
That's one thing I was gonna ask. I'm sure it does vary from person to person, but what's the typical time frame, say from start to leverage, right? Or start to getting these credit
Yeah.
lines?
Yeah, so we are averaging anywhere from 30 days to 90 days. So we have a 90-day program that really breaks down everything. We've seen people do it as soon as 10 days and a lot of people within 20 and 30 days.
Mhm.
But it really just depends because this is financial literacy. It's the first time people are hearing this information. And 9 times out of 10, it's exactly the opposite of what they believed to be true.
Mhm.
So it takes a lot of chiseling at the stinking thinking and rewiring and programming. So once you realize the possibilities and start breaking off, like, okay, if Brandon says this and this and this is true, then what about this, this, and this? Because you're going to start getting creative, which is good.
Yeah,
But that's where we kind of step in with, one-on-one coaching and group coaching to be able to help put the missing pieces together.
that's great. And I know this question actually goes along with Jeff. He had just asked this question as well on LinkedIn.
Oh,
Um,
cool.
because many of my clients, when they were off the air, right, they're just saying, "Okay, is this legit? Because this sounds really sexy," right?
Yeah.
But they're coming from a passive investor. I mean, there's an occasional person that might be an active investor, but most of these people are, looking to maybe buy a turnkey real estate property, or maybe not a turnkey real estate property, but maybe just taking this money and lending it back out, maybe at 10 or 12%. And it
Yep.
could be short-term lending. It might even be long-term lending, depending on the deal or the fund that they might be doing.
Sure.
Can this apply to that situation, or would that be a little bit too high risk? Or would there only be certain situations you would do that in?
Yeah, so I always like to keep it I like to keep because this is 0% interest that we're talking about. To
Mhm.
get up to
Yeah,
500K, 0% interest. Yes, there's other financial instruments that you can do for long term. It's going to typically cost you a little bit more than 0%, which isn't
yeah.
bad. But with the 0%, there are different you typically have anywhere from 15 to 18 months, sometimes up to 22 months. I always recommend try to be out, like in and out of your investment within 12 to 15 months max, so
Mm,
that you have the opportunity to keep moving it around and putting it to work. I just got done investing. So for the Burr strategy, for example, so
yeah.
buy, renovate, rent, refinance, repeat. That's such a great strategy because in 90 to, so 3 months to like 6 months, it can really you can make the money move and
Mhm.
set yourself up for success. I just got done doing a private money loan for 3 months, and I just got 20% back. And I just got the wire a couple hours ago, and like that's awesome because it was a flat 20%, not annualized, and I'm putting it to work on a regular basis. And I used credit cards to pay for it.
Yeah.
So
So
there's
yeah,
just
you're talking about
amazing
the
ways
burst
to use it.
strategy. So even then, like with, for example, like I know somebody ran into a situation with short-term lending, right? Trying to do like like an Airbnb property, short-term rental. And
Okay.
in that situation, they said had to wait a full year before they could refinance. You think that
Yep.
could still work here in this situation?
Of course, yeah, and there's plenty of lenders that will do less than the 12 months in for real estate terms, just because I'm heavy in that area as well. But
Mhm.
many will do the typical 12 months. You have to wait, and that's okay because if you have 0% interest for 15, 18, or 22 months, then you're golden. Even if
Yeah.
it's 12 months, the good news is that you can actually like what we teach at Credit Counsel Elite is how to get up to 500,000 every 6 months. Because when you apply for 10 to 40 plus credit cards over a 30-day time frame, once all of those new accounts start showing up, then you really can't apply for any new credit cards for the next 3 to 6 months. That's a good rule of thumb. So every 6 months you can do this. And it's the
Awesome.
same thing though. You wouldn't want to apply for one credit card because it's going to be the same equivalent to your credit profile as if you applied for 40. If you apply for one credit card today and it shows on your credit report, if you try to apply, next month or the month after, they're going to say, no, you're denied because they see that you just got done, applying for a card. You just got new credit. You're seeking credit and therefore they're scared, right? The banks are
Right.
very sentimental with those things.
And that's what I was going to ask is there like a deadline to this? Is there only so many times you can do it to the point where they say, all right, enough's enough?
No, there's no deadline. Every 6 months you can do this. The deadline that you want to be worried about is when you actually start your mass apply, then you have about 30 days, give or take. And it's
Mhm.
because when that new credit card actually shows up underneath your account section, then it is going to you're going to start getting denied for any additional ones. So, and it takes typically about 30 days for that new account to show up. There's certain banks like Citi or SoFi that will show up in the next like 3 to 4 days. So you want to be mindful
Mm.
about that and put that, lower on your list, more last
Yeah.
on your list, right? And there's also techniques that you can go after just business credit cards that
Mhm.
don't report to personal, but you'll get a
Just Duns
hard
and
inquiry.
Bradstreet.
Yeah. So therefore, you'll get a hard inquiry on your personal. You can remove that at any time. And then it's not showing up underneath your personal in the account section. So therefore, you can kind of just keep your mass apply going over the next, couple months.
Gotcha. Now,
Pretty
I know
powerful.
there's more questions rolling in right now, especially through YouTube and even LinkedIn. But
Cool.
how do you get people over the fear of using credit cards?
Yeah, that's man, if I had if I had a penny for every time, there it's the stinking thinking that we all grew up with that we were kind of like embedded into us
Mhm.
as we were growing up about credit. Like they're not teaching this in school. They're not telling you about financial literacy. But if you follow the rich, if you follow the successful people, like success leaves clues. The
Mhm.
money has a trail. And if it's like the banks have been doing this for the longest time, right? We give all of our money to the banks. They give us how much percentage back?
Yeah.
I
They
I mean,
nothing,
nothing. They
hardly.
yeah, they give us nothing back. So 0% interest money is what we're giving the banks. And then they lend it back out to us 9 times over on all different type of financial products, and they average anywhere from 500 to 3,000% on their money.
Right.
So and that's for personal loans, auto loans, mortgages, credit cards, like 20, 30%. The list goes on. So at the end of the day, if it's good enough for the banks and the top one percenters and, you know, uh, Jeff Bezos, Elon Musk, like if it's good enough for these guys, then it's good enough for you and I. And it's really
Yeah.
just learning what they're doing to us and flipping the script on the banks.
Yeah. Yeah, I know for me personally, like I don't mind borrowing, but definitely like I see it as a serious stewardship, right? Like
Yeah.
you gotta make sure you're buying something that's real here, like real assets, not trying to
Yes.
gamble with this money. Even if it's you say it's an investment, I would definitely not be throwing this into crypto or throwing it in the stock market. Well, you legally can't throw it into mutual funds.
Yeah.
There's a disclaimer you're supposed to sign saying you didn't borrow money to put in the stock market for that very reason, right? But I would think that's the kind of the big thing is in my mind is am I buying something that I know is actually going to generate a return to more than pay this debt?
Yeah. And I've had stock investors that are very savvy actually utilize these methods as well. And it's that fine line of they label it as, is it borrowed money if it's my
Yeah,
money,
they're trading on
from the
margin.
credit card. Yeah, yeah. So it's that fine balance. But I don't I think it's a great tool that you can use to diversify and to invest in different things and see what works out. But it's also your risk tolerance. And I like to bet on things that I know are going to appreciate. I'll get tax benefits, I'll get cash flow. And if I'm buying right from the very beginning and it's discounted, and I can cash out refinance in 6 to 12 months, get all my money back to pay off the credit cards, like
Yeah,
real estate. I mean, it's a no brainer. That's a safe, tangible thing that I can actually see, and it makes sense to me.
I love it. Well, let's get into some of these questions here. I know they're already been rolling in.
Yeah, I
Uh,
see them.
so John asks here on YouTube, he says, "Do you need to have a business in order to participate? And also, is there a more passive way to participate?"
Yeah. So you do not need an LLC to participate. There's a lot of ways that you can simply just be doing business as a DBA.
Mhm.
I recommend if you are a business owner or if you want to become one, then I do recommend starting to get your entity structures in place. In credit counseling Lee, we talk about setting up a trust, having holding companies, and kind of branching it off in that spider web, so that you can really own nothing but control everything in that type of mindset. But um, as far as more of a passive approach to this, once you're educated on how to get the funding from the banks, then it really just depends on what you want to invest in. That you can make as passive as you'd like. I invest in certain real estate syndications and I just lend out money as well for private money. And, I'm not doing any work. I had to take, an hour to sign some documents with my lawyer. I mean, they vetted it out for me as well. So it's kind of who you pay and how much time and energy you want into to fit within your lifestyle is what I recommend. But at the end of the day, if money was ever the issue, my goal is to eliminate that issue. And many people like wait until money is the issue and then they're trying to scramble and like, Brandon, help me, help me. And in some cases it becomes it would have been way more beneficial if we started before you even needed the capital, right? Like get the
Mhm.
capital before you actually need it. You don't need to use it. You can just sit on it. Every 6 months you can get more, and then you're going to have opportunities that come your way. You can take advantage and cherry pick whatever makes sense to you.
That's great. Great advice. That kind of ties in, I think, with Neil's question here, which says, "Which short-term investments work with this strategy?"
Yeah. So, like I mentioned, Private money lending is great. I enjoy that, backed and secured by real estate. I also actively invest in my own real estate deals. Last year, for example, I did a 90-day fix and flip. It ended up being very simple because it was right across the street from me. And I found this deal. Um, Within 90 days, I did none of the work. I had my crew do it, and I paid 260,000 with credit, 0% interest, to be able to get into the deal. I walked away with a wire. I netted $475,000 in 90 days. I netted that. That was mine. I got a wire for 730 something. I mean, real estate can be really, really amazing. Besides that, I typically don't love to sell properties. Like fix and flips. I'm not a huge fan of. I like to do that work and then keep the property. So we've done that with many other properties as well, and doing the BRRRR strategy, and that you can be in and out within 6 to 12 months,
Mhm.
and keeping the property, having no money into it, and paying off the cards afterwards. I mean, there's nothing better.
Well, I was gonna have a follow-up question to that very question with BRRRR strategy, right? Because BRRRR strategy,
Yeah.
I can definitely see that working. What about someone who's just holding on to a long-term rental, right? And let's just say that they're not gonna live in it, so it's investment property of that
Yep.
sort. What do you think about that situation? Like, how would that work?
So, and they're not going to be doing a BRRRR strategy. They're not refinancing
Yeah.
it.
Yeah,
Okay.
I mean, and maybe they decide to, but maybe they don't, right? I'm kind of curious to see what would happen in both scenarios, right?
Sure. So statistically, many people actually refinance. They don't keep it for the whole 30 years and then pay it off. They
Yeah.
refinance multiple times throughout the years.
Mhm.
However, you should never bet on appreciation ever. Like that's just icing on the cake, in my opinion. By all means, do
Yeah.
your own due diligence. If your market's skyrocketing and you believe in it, then follow your gut, follow your heart. But I like to follow the numbers, and that makes me feel safe.
Mhm.
So I look at appreciation as icing on the cake. If you are buying a retail property that you're not putting any work into it, it's not going to appreciate greatly in the next 12 months. I would say 12 months, even if you have a 22-month time frame at 0% interest. I
Mhm.
wouldn't do that. That's not an investment to me. um that's something that it could be it's a long-term investment. Like if you're cash flowing, uh, whatever that is, a couple hundred, a couple thousand, great, but is it going to be enough to be able to take care of your initial, down payment, your credit that you put into that? If not,
Yeah.
then I would look at other alternatives that you can put, the money to work faster, and constantly just keep on getting a little bit more diversified. And then there are many other financial products that have the long term, financing available. And yes, it's not going to be 0% interest. It may be a little higher, but it's going to make you sleep better at night because you have backup plans and it's locked in. And I recommend those because we're going to teach you that financial understanding, right? How to get the banks to say yes to those products as well.
Great points. Uh, Before I get to to the question that Jeff has, I think this will kind of segue into it. So obviously, if you have 0% interest, I would assume, and I could be wrong, I would assume most of these would still require monthly payments, even if it's at zero. Is that correct?
Yes. Great question. Very great question. And it's something a lot of people actually overlook. So I'm
Yeah.
very thankful that you brought this up. So when you're at 0% interest for the next 12, 18 months, whatever, you're still responsible for the minimum payment due. And in many cases, it's like $35, right?
Mhm.
But in if you're taking out a large enough chunk, and depends on the bank, it could be anywhere from typically 1 to 3%, and sometimes even higher. So it's
Yeah.
important to actually ask the bank. Like, don't ask me for it, ask the bank, because it changes on a regular basis, and they're going to be able to educate you and tell you, like, hey, if you take out this money, yes, we have a promotional deal going on at 0% interest for the next 18 months, great. Your monthly payment will be 1 or 5% of, whatever it is, of whatever that balance is that you hold. And it's very important. I found myself making this mistake, and taking all the trial and error in the very beginning, when I was trying this, is if you have more availability on this card, you actually cannot, if it's a balance transfer, you cannot use the card afterwards until that balance is fully paid off. If you use the card for any little basic transaction, you get a burrito somewhere down the street, $5, you will start getting charged interest on that full amount. The 0% interest stops. Now, I made this mistake numerous times, but I just called and told them young, dumb, and made the mistake. Can you please, help me out here? And they did each and every time until I finally like knocked into myself, like, all right, you can't use it when you actually take it out. But it's something that you got to be aware of because it's going to be a sticker shock when you see the interest pop up of like, and they're at 20 something or 30 something percent. No good.
Hmm. And I've noticed too, like a lot of times you get those 0% promotions, sometimes the payment will be higher during the promotional period than it is during the actual payback period.
Mm,
Even though you're paying all principal, right, with that.
yeah.
But sometimes I've noticed that, like you said, 1 to 3%. And a lot of times I've seen like right around 3%. So
Yes.
if you charge up $10,000 on that, you're probably going to be paying at least $300 a month on that
Yeah.
10,000. So make that 500,000. I mean, you might be looking at $15,000 a month. Wait, is that right? No, 50. Yeah, 15,000 a month. I guess so. Sounds
Yeah.
high, but it is high, depending on the situation of the card.
And it's the cost of doing business. So this is what I recommend. If you need 200 or 300,000 to be able to close on the deal, why don't you take out 350 or 400,000
Right.
just in case so that you can make your monthly payments and you don't need to worry about it. And you keep that money in your account to just in case, especially in real estate. I've never been a part of one real estate transaction where everything from beginning to end went exactly how it was supposed to. Never. And I don't know, like I'm not ashamed of that. I'm just like, it's just that's how the real estate game is. There's always something unexpected when you are doing a remodel.
Yep, for sure.
Yeah.
Well, and let's lead this into Jeff's question here, which is what are the penalties if we're late on repayment? I guess it depends on which period of time you're looking at because there's probably different penalties, right?
Yes, yes. So on a monthly basis, if you are ever late on a payment, so the minimum payment, right? If you don't make your minimum payment, then you will be considered late. If you have a late payment on your credit card, or credit score, it's a real big smack to the face. You're going to see, 60 to 80 or even 100 points drop instantly. And it really makes it so difficult for you to actually, especially your first year. If you have a late payment within this last year, it makes it very difficult for you to get funding.
Mhm.
And then it drops down to 1 year to 2 years. It makes a little less of impact on your FICO score, just a little bit. But you can actually start getting a little bit of funding then. And then the next one is 2 to 4 years. Again, it drops down a little bit less. You can still get funding. After 4 years, it's not hurting your FICO score anymore. However, the banks can still see it. So they may ask you about it. And you just want to be very aware of that. And don't, I always recommend set up your monthly auto pays, but trust and verify. So always verify a couple days before, put it on your calendar to triple check that it went through. Because if not, you must do it. There's no excuses. They're not going to really work with you in any way. If you do have a late payment, call the bank, beg, plead, ask to speak to a manager, and ask for a one-time goodwill gesture. This is where they will forgive that late payment once. They should send you a letter, and that's like your golden ticket that you want to hang on to and send into the three bureaus yourself. But they're going to send it to the bureaus as well. And you really just want to be very cautious of that. Don't let it happen. It is a real big smack to the face.
Well, I like your strategy because your strategy that you mentioned just before this is very similar to what a lot of investors do, right? Which is they're
Yeah.
they're pricing in the payments that to make. Like if they have pay a preferred return on a syndication, right? They got to
Yes.
price that in, especially if they know they're not making any money on that project in the meantime. And so, for example,
Yep.
someone wants to, they borrow $400,000. They may want to get an extra 100,000 to pay payments for maybe the next 12 months. Just say in
Sure.
that scenario. The great thing is, and this is the key, I think, is somebody might say, "Oh, but that's 500,000." No, it's not. It's still 400,000 because you're just taking that 100,000, paying it back towards paying down the principal because there's no interest of the 400,000. So you're really still you borrow 500,000 to still only have a balance of essentially $400,000, if that makes
Yeah.
sense.
And you don't need to use it all, but just be mindful
Yeah.
that this is the cost of business and you want to be safe than sorry. I'm a person that always has multiple backup strategies just in case, because the first couple real estate deals, it didn't go at all how I wanted. And then I realized I need to have multiple backup strategies just in case. And that has always served me very well in many cases.
Great, great advice. John, I'm gonna come back to your question in a second. I'm gonna go to Jeff's question because that kind of ties in with this. So it says, when the 0% is over, do you owe any back interest?
No. Nope. There's no. So, okay, you need to pay off the balance when the 0% is over.
Mhm.
I'm sure that's a very, um, like that's common sense, but sometimes it's not so common. So make sure you pay off whatever you took out before that due date is up. If there is a balance afterwards, then yes, interest is going to start occurring. Now, if you catch yourself in a tough situation and something went wrong, whatever it may be, um, then ideally you learn from those mistakes and you have extra backup plans. But what you could do is call the bank and beg, plead, ask them for an extended period of time of 0% interest. Some banks will do this.
Mm.
Others will have a kind of like an extended promotional rate. It's not going to be 0% interest, but it could be at like 5% interest, which is a heck
Mm.
of a lot better than 20 or 30. So ask these things. Don't be shy to. It's all negotiable. And the worst thing that they can say is no. And if they do, hang up and call again and ask to speak to a manager and say the same thing and just keep doing it until you become that pesky person that they're like, all right, fine, we'll just give it to you. Just stop calling us. And I've seen it work, and that's why I recommend it, because if you fall into that situation, it's not the end of the world. You don't need to curl up and tuck tail. Figure it out, deal with the situation, and you'll be able to come out victorious. Keep in mind too, as long as you do not have any late payments, right, and that you're making your monthly payments and so forth, you have that buffer. Every 6 months, you can redo this, and you can get another up to 500,000. So, I mean, that's a big deal. So, if you do this 3 times within 18 months, right?
Mhm.
Um, that 0% interest that you originally took out might be coming up, but maybe you have some additional funds that you can kind of mix in to be able to cover that. I don't necessarily recommend that in all cases, because you're kind of taking money from here to pay off over here. But if you need that extension and the banks aren't giving it, you have options.
Great. Now, really quickly, maybe we'll have Danielle put it up because she probably has a link. But
Cool.
if people want to have more information on this, before we get to some of these other questions, I'm not ignoring you guys. I see them coming in. But let's just put up the link right now to learn more about your program and what you guys can do with that. And while we're putting up that link, why don't you tell us just about what you do? I mean, you've kind of told us a little bit, but tell us a little bit more about your program.
Yeah, so it is an online course. We break down, you know, everything that you need to know from beginning to end. It is a 4-step process to uh, be able to understand how the banks and lenders are judging you, how to be able to play the game, right, and be able to get all the funding that you truly deserve. So how to talk to the banks and get the banks to say yes, right? The 4-step process is educate, fix, build, leverage. And the website, it's creditcounselelite.com. It's www.creditcounselelite.com. And that is where the course is going to break out about 80% of the information needed, and afterwards you're going to have a ton of questions. And it's not because we haven't like answered all the questions by making a video on there. It's just your creativity is going to start spinning like crazy. And that's where we have a weekly group um, Zoom call where we jump on every Thursday to be able to go over, any questions that you have and do some training. And then we have a customer success manager that's assigned to each individual. And you get a personalized link. You can bug them as much as you need. I train them up personally myself. They've gone through the course themselves and excelled in many ways. And I trust them, greatly. And they report back to me on a daily basis. But We basically give you everything that you need to be able to set up the one-on-one calls, to go over where you're at, where you're looking to go, and how to get there in the fastest time frame, giving you homework and making sure that you're opening up the right bank accounts. We have a list of every single bank nationwide. There's 9,500 banks. We have it broken up state by state and which ones are giving out the most funding. So we know our stuff and we have the resources to be able to put you in the right position at the right time to really just soak up the info. It's a lot of info. It's not easy by any stretch of imagination. It really isn't. But that's why we're doing this together. We're not going to just like feed you to the wolves. Like, we're doing this together, and you're going to have a lot of learning curves, but you're going to win drastically. We're averaging right now 324,000 per person is,
Wow.
what people are bringing in. But we've had plenty of people get, Duncan got 650,000 in new credit lines. He bought 3 properties. He's cash flowing 9,000 a month, and he only had to put $3,000 of his own cash into it.
Hmm.
And then Ryan got 487,000 in new funding, and when his very first mass apply, and he has one card at 100,000. I mean, it's a real big deal.
That's awesome. That's really cool. All right, I'm going to start hitting some of these other questions here. I'm going to shut up more so you guys can ask them. John had asked, he says, does your company offer these properties and lending opportunities that can be used with the funding that these cards can provide? So essentially, are you providing investments to do this with, or are you just teaching and showing how to get the credit?
That is a great question. So in our mastermind group, we unlock the leverage part, which is, okay, once you have all this funding, now what? Okay. Ideally, I really want you to be equipped and prepared to like stir up what's in your heart. Like, what do you have a business? Do you need to grow and scale your business? Do you want to start a business? What are you passionate about? I want you to like, because some of us get so I wouldn't say depressed, but like kind of like pushed down with all of our goals and dreams for such a long time, and you kind of give up on that because we were
Mhm.
struggling to just keep up, right? I want you to get creative again and start realizing that this is a full possibility. Money is not the issue anymore, right? You can get capital to be able to put it to work. However, we do have many different resources, for private money lending, hard money lending, real estate, and and also life insurance policies that for infinite banking strategies that you can do. And we've had other people start up Turo businesses where we've showed them how to get 110% funding for up to 4 cars under business credit. I mean, these type of things that you can be able to start getting great cash flow on a monthly basis, that for the average person, it would totally change their lives.
Very true. Very true. Yeah, you didn't even consider that there's consumer debt. This could actually help you pay off as well, and
Yeah.
it's just make it easier paid off without having the interest in the way.
Yes.
Great question from Paul here. He says, how often can you directly use a credit card to purchase investments versus pulling a cash advance from the credit card? So, like for example, a 0% APR and a 0% cash advance card says it doesn't seem to be that common.
Sorry, what was it again? This is Tron.
Paul Cormier.
Paul.
Cormier.
Sorry, do you mind repeating it again? I got
Yeah, it
lost in
says,
there.
how often can you directly use the credit card to purchase investments versus pulling out a cash advance from the credit card? So he was saying it doesn't seem to be common to find a 0% APR and a 0% cash advance card.
Okay, yes. So there's certain, so it's not always going to be labeled as a cash advance. In some cases, it can be. And obviously, if it ever is, make sure it is a promotional deal at 0% interest. Okay. If not,
Mm.
there's also balance transfer options. Long story short, every single card that you see out there, there's ways that you can actually liquidate it into cash, cold hard cash into your bank account to be able to send wires and so forth. And if not, there's also other ways. There's other strategies online that you could, like plastic, for example, not with a C, with a Q, that you could actually utilize your credit card to be able to send a wire or send a check
Mm.
and so forth. So there's many different options out there for you to get creative to liquidate the funds and keep it at the 0% interest.
Good one. Yeah. Okay. See, Jeff asked, and this is true. He's like, wouldn't this impact my debt to earnings ratio and inhibit my ability to get mortgage approvals?
Yeah, if it's underneath only personal, then yes. If you keep a high balance. Now,
Mm.
that's why we recommend business credit, because you can still personally guarantee it and they're judging you with your FICO score, your personal. However, you only get a hard inquiry there, and then it's really a business credit card. So the funding, if you're going to leverage the debt and have a high balance on the credit card, keep it on the business side so it's not showing up underneath the personal side. Okay, that's a very key
Mhm.
component. I made this mistake again. I got a list of mistakes that I made, but this one in particular, when I was very, beginning, starting out, I started in 2015 investing in real estate, and I utilized more on the personal credit. I had certain cards that I was able to get up to 80,000 and 90,000 on just one credit card, several of them. So I was liquidating them, but it was personal credit cards. And
Mhm.
and I went back to the banks afterwards to do a cash out refinance, and my debt, my utilization was high. My score dropped 100 points. And even though I had enough equity to pay it off, and I said, "Hey, you can just pay off the credit cards," they were like, "No, that's not how it works." And so it was a big learning curve. So don't make my mistakes. Use business credit.
Yeah. So as Jeff says, do it in LLC, right? Or something like
Yeah.
that.
Yeah, or a DBA. Yep.
Yeah. Ton had a question here. He says, if you do balance transfer or access to the credit line of credit cards, there's always a fee of 3 to 5% to convert to cash. Does that not mean not 0%? Is it really 3% for a year?
Not always. It's not always that. That's the common strategy that the average person will see, I guess, if
Hmm.
that makes sense. There's definitely methods that you don't need to pay any fees whatsoever. In some cases, it's just easy and convenient to take advantage of like that 3%, or sometimes it's 1, 2%. Other times I've seen 5%, but you don't want to
Hmm.
pay those. You can get away with the 2 and 3% all day of the flat fee to be able to get access to liquidate the cash. Sometimes it's just, very quick to make that call or click a button. If you want to save that percentage and actually, move things around, and I mean, there's many different ways that you can liquidate the funds without paying those fees.
Right. Good point. Awesome. Well, again, the website, the link here is creditcounselelite.com. So be sure you guys check that out. Any final words you have, Brandon, for our people here, our listeners, watchers, whatever you want, viewers, I guess you say,
Yeah. All of our viewers, listeners, watchers, all of you guys,
stalkers.
first off, yeah, I'm proud of you guys to actually take the time out of your day to actually show up to something like this. The average person out there isn't doing this, right? And really cares about their future, their finances, and really doing it for your family. That's why a lot of us are doing this. They want a bigger and better, brighter future, right? So I just commend you guys for actually showing up to something like this. Don't sleep on your credit. I really highly recommend that. If you've ever run into a situation in the past, in the present, or you think in the future that, hey, money's getting tight, it would be really good if I had a little bit extra capital to be able to take down more opportunities, and stop seeing great opportunities that you could have became rich on to actually like pass you by, then like really take this moment to focus on credit today, because the financial literacy, it's something that you can't. I know we all want the magic, quick, easy pill, but think of it like working out. You can't outsource your push-ups. You got to take this like by the horns, and really take this to heart, because I've seen people, like we've helped out thousands of people, and I've seen hundreds of them be able to truly like transform their financial future and get generational wealth. Like, no exaggeration. I'm really impressed by some of the individuals that have come our way and that have took this seriously and just totally changed the trajectory of their future. And the good news is, like, you guys can do exactly the same thing. Even if you're in a great spot right now, it could always be better. There's levels to this stuff, and don't settle for less. So I appreciate your guys' time greatly, and yeah, I mean, Chris, it was amazing. So I appreciate you.
Absolutely, man. No, I agree with you. I've said this to a lot of people, especially the last year, is I think liquidity is going to be one of the biggest, most important things in this environment, because
Yes.
everybody was saying last year, deploy all your capital. Don't hold any cash at all. Have no cash available because you just got to invest it all, get it out there because inflation will kill it.
Because
And that's
inflation.
when I
Yep.
knew
Yep.
that usually the best of us investors know to do the opposite of what everybody's telling you to do, right? Which means
Yes.
I need to hold cash. And I
Yep.
think this is a very timely subject right now for that very reason. So
That's good.
definitely, I recommend everybody check out creditcounselelite.com, especially if you feel like this resonates or it could be something that applies to your situation,
Yeah.
especially if you're someone who's like an active investor or a business owner. I think this could be something that could really be a game changer for you potentially.
Yeah, it's a no-brainer. Yeah, if you guys want a big stack of this, by all means, and doing it on a regular basis, don't settle for less. Let's do this. So I
That's
appreciate
right.
you guys greatly. You guys can also
Absolutely.
follow me on Instagram. It's Brandon Elliott Investments. We also have a brand new Instagram page for Credit Counsel Elite, and then Facebook.com/Brandon Elliott Investor.
Perfect. Thanks everybody for joining us today. We'll see you later.